So this exposure,
ಸರ್ ಮಾಡ್ಕೋಬೋದು.
okay, please take another 2-3 minutes. We didn't formally identify groups, but even if we can discuss with one sitting next to you, it's fine. Please make an attempt. It's how far. And I found this exercise very effective in classroom because students at least understand where they stand when it comes to reading. And even for us, it's a learning lesson. Please try 2-3 minutes. Then I'll pose some questions and answer them. All right. Let's see if there is any progress. So friends, we have 5 businesses, 5 balance sheet. Which balance sheet belongs to which company or which business? That is the question. Entire case is about that. Actually, it's a 17-page case, but I just gave a part of the case. Only this question I given you. Okay. Any attempt? Nothing right or wrong? Please try. Any of them which you could identify? Company? D. Okay. Sir, is there a mic available for them to answer? Ah. Sorry, sir? E is automobile. Okay. I'll just list out. Let us see later how correct it is. So, sir, what's your name, sir? Professor Vishakanta says E is, which ones are automobile? So, just mentioning E. Maybe right, maybe wrong. I don't know. We'll see that. But that's one response. Which one? D is the supermarket chain. Okay. Oh, so we have another response for same supermarket C. Now, how we identified, I'll come to that. But first, let us list out your responses. And responses need not be only from the front. Mic is available. Even from the back, we can get. So D is electricity. Sir? D. Okay. Okay.
E aerospace.
Sorry?
E.
E is aerospace. Okay. Fine.
C is supermarket.
C is supermarket. Okay. Somebody also had mentioned that. I mentioned it here.
D is trading.
D is trading. Okay. B would be aerospace is another response. A also. Now, I feel what I can do is, for all the 5 companies, I can put A, B, C, D, E. Because I think we're getting all responses for each of them. Right. Now, excellent that you're trying to identify. Now, let's go for the criteria. Okay. Sir, you said D is automobile. Criteria used is inventory. Okay. Electricity receivables. Okay. Let us see. Electric utility. Okay. So, less receivable C, supermarket. Okay. That's very right interpretation. Dr. Balaji, what was your interpretation? Which one? Okay. Any other answers? And the reason? C is aerospace. Okay. In which case do you think collection period will be very less? Supermarket. In fact, it may not be even 3, it will be even 0 also. Why? All cash sales. Maybe some corporate clients might possible. So one major clue for supermarket to be C is receivables is very, very low. But we can't be surprised even if it is 0 because that is supermarket, all cash. Excellent. Okay. And again, if you see property, plant and equipment for C, how much is it? 49.50%. So imagine DMart, Reliance Fresh, they need a big infrastructure. So they need to invest in infrastructure. But if you look at other things, profitability will be usually less because supermarket chains usually more offers. Profitability is just 2% if you can see. But most dominant feature is collection period is just 3 days. That's the dominant feature. So one thing is clear, C is supermarket. So I think most of them identified correctly. Excellent, wonderful. Okay, next. D is a trading company. In fact, it's very correct. Why? Yeah. So again, we don't need much investment in infrastructure. Property, plant, and equipment is less. Profit margin is less. And main feature is inventory turnover ratio. How many times we have? And trading companies are one where there's a faster replenishment happening. So the dominant feature to make it a trading company is inventory turnover ratio. Wonderful. And of course, even the credit period, collection days, most often very long collection period. So trading companies, high credit period and high inventory, less investment in fixed assets. So all this make D trading company. Wonderful. Excellent. Now this is matching with the teaching note given by Harvard. But if you find that is wrong, this is my interpretation, definitely possible. See, it's not necessary. It has to be only one perfect answer, not necessary. What matters is how we justify our claim. Okay. Next. So 3 more. Not big challenge.
Sir, E is aerospace, sir.
Which one, sir?
E.
E is aerospace.
Because its inventory turnover ratio is just 1.1.
Exactly. Perfectly right. What's the turnover? Inventory turnover? Very low. But long period because the work in process conversion into sales takes very long time. 1.3 means as good as 1 year. So that's the dominant feature making it aerospace. But please remember, aerospace, automobile and all, we don't need much of equipments. Why? Because both aerospace and automobile are assembly. It's not manufacturing. Assembly is different, manufacturing is different. Manufacturing calls for machinery, etc. Assembly, the requirement in investment is relatively less. Not that it will be complete less, relatively less. So what is that we have here? Investment, just 25%. But dominant feature is this. And we can also consider one more thing. Please see. Other current liabilities were 27.4. Please see. E, other current liabilities. Now, can you just give a thought? What can other current liabilities include apart from what is given? Other current liabilities, what all might it include? Sir, one major item of other current liabilities is customer advances. And this is one industry, aerospace manufactures one industry where it is made to order, made for customized as per the requirement. So it is advances are always more. Where does customer advances come? It's a source of fund. Where does it come under? Current liabilities. So that's also another feature. But of course, you should be able to read, identify that customer advances is a part of other current liabilities. But essentially, most dominant feature is inventory turnover, just 1.1. Where else can we have such low inventory turnover other than aerospace? As it said, the process of manufacturing itself is quite late. Okay, so that also is perfect. So we're now left with 2 more. A is collection period. Sir, you pay your electricity bill every month. Maximum was the due date given? Normal 21 days plus. Do you think in electric utility undertaking collection period will be 9? No. Even with extensions, maximum 1 more month, so 1.5 months or so. So definitely it can't be 114 cannot be for electricity undertaking. So that indicates it is. And most important, investment in plant, property, plant and equipment is very high for electric utility. Huge machinery. So investment, high investment in property, plant and equipment and collection period of 48 days. So B is electric utility. which makes A this. And why will there be 149 days correction period? Please remember, manufacturers sell to whom? Dealers. Dealers sell to customers. We customers pay immediately, but dealers have a credit period, usually 3 months to 6 months credit period for them to manufacturers. So for automobile manufacturer, there's high credit period, but dealers usually it is 0. Fine. You can read even more features, but excellent, wonderful. At least now we know what to look for in this, and all this what you're familiar already, correct? Only one thing we need to know is the feature of those industries, and it's common sense, you can identify. Now, later, we'll give you one more case, which I showed you earlier. Now I don't want to take time for that. It's called identify the industries. In this we have, please see, a bank, a office personnel agency, a hospital, a warehouse club, like stores, club stores, we say, airline, manufacturer of household products, personal household products, a hotel, department store chain, discount department store chain. Difference is Reliance Mart, Reliance Fresh can come under upscale. Discount department is Metro, etc. International oil company and a defense contractor. These are the 12 businesses. And again, we have 12 balance sheets given. 12 balance sheets. What I have to do is same. Which of these belong to which business? Very same. Now, we'll circulate the case. End of the session, I'll leave my email ID. Those interested, send a mail, I'll send the solution. I want you to try out. Right, wrong shouldn't matter. But one clue, one hint I'll give you. In this case, inventory turnover. First, we have something called NM, not meaningful. NM, exactly. For which type of industries inventory has no meaning? So that's one big hint for us. The 5 companies for which it is NM, the 5 service industries. So to that extent, it is narrowed down. Now, that's one clue I've given you. Others, you try to identify. Madam, that case, at the end, the other case, you can later distribute. Not now, later. Fine. Okay. Now let's go to the last model. The other one, as I said, is an offshoot of that. Okay. Just please listen for a minute. Friends, if you go to my university website, listen, sir, chanakyauniversity.edu.in. Just type Chanakya University, it will take you to website. Here, there is this thing called research. Under that, we have publication. Under that, case studies. Okay. Now, there you get this case, what I was showing in the morning and what I'll be discussing now. Reliance Industries Limited. Is there a likelihood of manipulation of the financial statements? Now, if you go there, you can download the case and the teaching note. Now, with every case, there's always called teaching note. How to teach the case and what's the solution for the case. Case is with you. How to teach it, how to approach. So, there's always that. You can download this entire case, and in this case, There's one link at the end. One link at the end, spreadsheet, student spreadsheet. If you click on that, you can download an Excel sheet in which whatever exercise I'm showing you now is there. So whatever I discuss now, you can also do it. You can give it to your students to do it. And you can also get teaching note and also called instructor spreadsheet. So a spreadsheet prepared and given to instructors readily to give you what is the solution. So that also can be downloaded. Download it. I will also pass it on to you later. This entire exercise. Now, what is this? Beneish M-Score. This morning, I was downloading some animations. Please see. Tell me what is the theme. This is how they've been doing. And for years, they've been doing it so. But now they're forced to do it the right way. And they're feeling bad about it. Do you know what it means when all our financial statements are in red ink? What is it? What does it mean? Red means it's in distress, correct? Of course. Our man says, time to change the printer cartridge. That's how much we can visualize. Now, this is the beauty. The boss is scolding the employee. I know figures don't lie, but your job is to make them do. And that's what today accountants are hired for. And this is interesting. You handled the audit so well, we are promoting you from accounts receivable to accounts deceivable. How much is 3 minus 2, sir? 1. But student is very prompt. He says, do you want to answer according to my school mathematics or government mathematics or company mathematics? Each one, it can be different. And this is interesting. In, it's no more out. It is ouch. Now, they're discussing something. And please see the happiness in their face, excitement in their face. And this is what they say. There are few moments in business more exciting than the quarterly placing of the decimal. They're trying to identify where to put the decimal in profits. Now, what does all this indicate? What is all this pointing towards? And this is common. This happens. We discuss so many models. DuPont, Z-score, Petrovsky, all this can work if the financial statements are authentic, reliable. How to ensure that? How to know that there is no manipulation? Here comes a model. Again, a very brilliant model. Again, success rate around 71%. Any model, let us keep in mind, 100% success rate is impossible. Where you can find likelihood of manipulation, likelihood, possibility of manipulation, probability. Very interesting model. I'm sure all of us might have heard of a new dimension of accounting called forensic accounting. Forensic accounting is all about trying to find, is there a manipulation, fraud? This is one such model of forensic accounting. And very good scope for research because not much explored. Now to find out from financial statements, is there a scope? Is there manipulation or not? Friends, as usual for this we need 2 sets of data, current financial, last financial year. Now what I'm showing is what I used in the case Reliance Industries. So this is taken from Reliance Industries. When the annual reports, everything is part of it. When you do 2021, 2020. 2020 was a financial year for which I took. So current financial year is 2021 end. Last financial is 2020 March end. All this data taken from annual report. Where to take it, we know. Okay. Now, how to find, is there a likelihood of manipulation? Is there a possibility of manipulation? Beneish Again, a professor in one of the universities, I think University of Chicago or so, gives 8 criteria. First, I'll show the criteria, discuss them one by one. Taking each one criteria is a no use, is converted into a model, an econometric model to identify is there a manipulation or no manipulation. Now, what's the first one? When you download the case, all this is available. So you can just notice the discussion. Now, first one is an index called DSRI, Days Sales in Receivable Index. Very simple. All that you have to do is current year receivables by current year sales, receivables as a percentage of sales. Last year also, receivables as a percentage on sales. So both current year, last year, take receivables as a percentage on sales. Where do you find receivables? Where do you find receivables, sir? Balance sheet. Where do you find sales? Revenue. So I'll just take that. So all this is information. Whatever information we need, inputs we need are compiled in one place. This is from Reliance. So what should I do? Current year receivables by current year sales. So take receivables, current year receivables divided by current year sales. Same way, last year receivables by sales. Divide what by what? Divide current year figures with previous year. We get what is called DSRI. DSRI, I'm showing that calculation here. So DSRI is current year receivable index by preceding year. We get a number, 0.738 something. Now, what is the interpretation of this as per the model? You tell me. Compared to last year, this year, receivable percentage, if it has increased, what does it mean? If the receivable percentage has increased, is it good direction or bad direction? Not good. Because as far as possible, receivable should keep decreasing. Our investment in receivable should decrease. But let's say it is greater than 1. When will it be greater than 1? When current year receivable percentage on sales is more than last year receivable percentage on sales. It indicates companies' receivables are growing as a percentage of sales over year. This can suggest either deteriorating economic conditions at the company, or that is companies incentivizing sales by extending more lenient credit terms to customers, or aggressive accounting, that is the recognizing revenue before it actually happens. So greater than 1 is a danger signal, less than 1 is healthy. Okay, this is one scenario, but based on one single factor we can't judge anything. Keep in mind. Now, what's the next index that it says? GMI. It is called gross margin index. What is gross margin, sir? Gross profit as a percentage on sales. So calculate for last year, calculate for current year. So let me first calculate it here. Gross margin. Now, can you tell me from the information here, how can I get gross margin? Gross profit? Sales minus cost of goods sold. So what I do here, gross profit margin, sales, I'll take sales minus cost of goods sold, that is gross profit, divided by sales. So current rate is 33.54%, last year 30.45%. And this formula says divide last year gross profit margin by current year gross profit margin. So take it here. Last year's gross profit margin divided by current year. So we get a number. Now, if it is greater than 1, means last year our profit percentage was more. Not good, correct? Means this year it is less compared to last year. Indicates company's gross margin is deteriorating year over year. So higher the GMI over 1, more drastic. Less than 1 means this year we are better than last year. Okay. Easy to calculate. All information is available in financial statements. Just compile them in one place, whatever we need, make the calculations what I am showing. Okay. Now, this is an interesting number. Asset quality index. Think and tell me. Friends, current assets plus PPE. What is PPE? Property, plant and equipment. When I divide by total assets, I get percentage of productive assets on total assets. Out of total asset, what is the percentage of productive assets? Now, when I say 1 minus, what does it mean, sir? Percentage of non-productive assets out of total assets. So current assets and property, plant and equipment are productive assets. Remaining are non-productive. So intangibles, goodwill, etc., whatever else you have, investments, whatever else you have are non-productive. So what does it do? Take for current year, take for preceding year, or in simple words, take non-current assets other than PPE, take non-current assets excluding PPE. So I'll show this way. So asset quality 1 minus current assets plus property, plant and equipment divided by total assets for current year. This for current year, same way for last year. Divide current year figure with last year's figure. Current year figure with last year figure. Okay, you get a number 0.813 something. What does it mean? When this is unproductive assets, correct? 1 minus this is unproductive assets, non-productive. If percentage of non-productive assets in the current year is increasing than compared to previous year, more than 1, what does it mean? Non-productive assets are increasing, which is not a healthy sign for the company. So this is the third factor. The fourth factor is very simple. Take sales growth index. Is sales and growth good? Is growth in sales, is it good? Yes. But when there's a growth in sales, but no growth in others, then it's a serious concern. Something is wrong. So it says capture current year sales by last year sales. So current year sales by last year sales. As you can see, there's a decline in this company as far as sales growth is concerned. Then depreciation index. By now we know what is depreciation. Sir, what is depreciation? Profits kept aside for replacement of existing fixed assets by the end of its useful life. Now, calculate effective rate of depreciation for last year, this year. How do you get effective rate of depreciation? Depreciation by gross value of assets. How do you get gross value of assets? In the balance sheet, what we always have is net value, correct? So add back depreciation. So this is how we get depreciation rate. Depreciation divided by depreciation plus net property, plant and equipment. So current rate is 3.05%. Last it was 3.16%. So what is it asking us to calculate? Take for preceding year by current year. So preceding year by current year. Preceding year depreciation rate by current year depreciation. So you get one more number. Now, again, what does it mean? It is greater than 1. It indicates company's effective rate of depreciation has slowed over the year. What does it mean? Increase estimate of useful life. How do we calculate depreciation, sir? How do we create depreciation? What are the methods of depreciation? Now, let's say, and in calculating that, one thing we have liberty to estimate is useful life. That's we have liberty. Other things we may not be able to change, but useful life is in our control. So initially I said 5. Now I made it 8 years. I give reasons. What I took as 10, now I say it's only 4 years. I can change. So because of that, depreciation changes, rates change. And anything greater than 1 is not good. Means we are claiming lesser depreciation, but for what? Depreciation should be, it's not necessarily should keep increasing, but there should be a fairness. Any difference, it means there's some possibility of manipulation. Next, simple item. Sales, general and administrative expenses as a percentage on sales. So take sales, general administrative expenses as a percentage on sales. So for current year, last year, divide current year percentage by last year percentage. So current year by last year. Again, you get a number. It is greater than 1. It indicates there's an increase in these expenses, representing declining administrative and marketing efficiency. Why should sales, general and distribution expenses include disproportionate to sales? When you take the percentage, it should be similar. But when it is increased, it means there's decline in efficiency of marketing administrative efficiency. Then leverage index. What is leverage? Leverage is measure of risk. If it is operating risk, we call it as operating leverage. Financial risk is measured with financial leverage. So that's one such index. How to find? Simple. Total debt, both current liabilities and long-term debt, divided by total assets for the current year. So we get leverage, current liabilities plus long-term debt divided by total assets for last year, current year. Divide current year figure by last year figure. Current year figure by last year figure. Again, you get a number. Sorry. Now, higher this indicates what? More debt compared to last year. Numerator is current year leverage. Denominator is last year leverage. More than one indicates this year the borrowing is more than last year. Particularly when the sales growth is not high, but this is growing, then it's a area of concern and a caution. Lastly, income from continuing operations. So in accounting, financial statement, we say income from continuing operations, discontinued operations. But take what is continuing minus cash flow from operations. Cash flow from operations, which you get in cash flow statement, by total assets. Hence, bigger the number indicates more divergence. Income from continuing operations, accounting profit. Cash flow from operations is cash. If the difference is big, it means what is shown, what we actually have is different. And bigger the number indicates there is a big divergence, area of concern. So how to calculate? Income from continuing operations is nothing but net income. Net income minus, this is only for current year we take, net income minus cash flow from operations divided by total assets. Now, these are the 8 measures what Beneish says, Beneish says we have to calculate. Firstly, each of them has a different indicator by itself. But each of them may indicate something. One may indicate good, one may indicate be careful, one may say it's in a wrong direction. So he merges all these with a model, an econometric model. And as I said, all these are the weights. So multiply each with the coefficient. Weight is the coefficient. Add all these, you get a number. This is called M-score. Just shown the calculation. This entire Excel sheet you can download by yourself and you can do simple working. If you know the formula, you can just do it. Okay. But what is the meaning of this? When do we say this is good, when this is bad? Friends, this is the website of Beneish. Kelly Business School, US. He is associated with that institution, that university, and this is what you see there. And if you go to this website, friends, he has given the template himself. This is the template he has given. All that you have to do is fill the numbers. Accounts receivable for current year, last year. Same what I showed you. Put the numbers. I should add it, enter it here, only then it will take us. And when you do that, it will give the score and also give how to read the score. So it will show this, and this is how to read. Now, if the score, whatever we have got, is less than -2, then there's no scope for manipulation. There's no manipulation. But it is greater than 1.78, minus 1.78 and above, 0, positive, anything above minus 1.78, then all likelihood that there is manipulation. So be careful with that company. These books, these accounts, these statements are not reliable, not authentic. Be careful. Now, what is the score we got here? Minus 2.827. What is your inference? Not a manipulator. I just gave a small Excel command here. A command I have given. So based on the score, automatically it indicate is it a manipulator or not a manipulator. Now, this is Beneish M-Score and found highly effective forensic accounting. One of my student works with E&Y, Ernst & Young. In fact, I got to know about this model from her. She's a director and currently her posting is in forensic division. She said, we use many models and this was the model she mentioned, how she said, gave me the source, and that's where when I started reading on this. One model used widely to check is there a likelihood of manipulation. Many such models, many more such models exist, but considered very popular, very effective. Said around 70+% effectiveness. When probed further, they found most companies which indicated greater than minus 1.78, minus 1.78 were found to have fudged their books of accounts. Of course, it also gives another model called 5 variable for simpler this thing. So the last 3 variables are remote. So Beneish says even with 5 variables also can calculate. Same measure, same calculation. Only instead of taking 8, it takes only 5, but interpretation is same. And this, whatever it indicates, if you can judge, only then applying other models comes into picture. My DuPont, Petrosky, Z-score are all effective only when financial statements are authentic and reliable. And that is not the case. What is the use? So first check, is there a manipulation possibility? If no, only then those models actually can come into picture. How to otherwise, why should we assume everything is fair? Auditor says in his report, I find this true and fair. And many times they themselves put a question mark after that. They themselves are doubtful about their own statement about truth and fairness. We know how audit reports are prepared. So considering that, today, this is the requirement. 2 months back, we had Sauharda Cooperative Society Federation. Sauharda Society, we know. Federation, which is housed in Bangalore, they came to us. It's an interesting case. They said, there are some companies which has very less capital but high profits. Companies whose turnover is good but loss. They gave many such scenarios and they red flagged some of these. Out of 1,700 active, around 300 plus they red flagged and said, we have doubts about these companies, what can we do? Now, we gave them a research proposal. I'll show that. We said, we'll apply all these models and check and tell you, is it reliable? We did that and we've been also doing further. As of now, in whatever we have done, whatever we have applied, we are applying Beneish M-Score. More than 30%, there's a likelihood of manipulation. That was what they wanted to find. Of course, we're continuing further with some other models to find out what has been manipulated. There will also be some field visits we have to carry out to identify the exact reason. They're funding us for this project, but could be possible because we could apply such models. And all these are very interesting research projects. Mind you, federations, RBI, SEBI, do you know the kind of funding they do for research? Please go to the website, NSE. So many research projects are made available. If you can prepare a proposal and send many good amount of time, they're interested, they'll fund you. And some of them are more market related, stock related, market, whatever, but all are interrelated. These models, whatever we'll be discussing, utility is very high. Knowledge of this is less. So when you have the right opportunity, make aware that these are all what is existing. We use this, we're able to identify what's the problem with you, how much of difference it can make. So this is one such other model, Beneish M-Score. Please go to where I showed you, my university website. You can download the case, the teaching note, the Excel sheets for students, for instructors, everything is available. I'll share this as well. Take it, make it, see the difference. Just learning ratios in the classroom, beyond ratios, if all this can be incorporated, they're ready for the industry requirement. And today that is one major concern that we have. We don't get people ready for requirement, let alone having high-end knowledge. Foundations are missing. And it's our challenge, our responsibility to make that happen. And nobody needs today book knowledge that exists. And today students are much smarter than us. Google search, Mother Google. Anything and everything they can get answers. But their solution for real problems? No, because they don't have exposure. No, that's where we need to begin. These are definitely more validation than those what we take in the classroom. So this is another model. But now I'll show the last one, modified C-score. You will notice that everything we discussed on the Beneish M-Score is already here. Now, modified C-score is a statement of 6 items. 6 items. We should read each and again put 1 or 0. If the score is close to 0 or 1, it means there's no manipulation. It's fair. We can rely. Closer to 6, some danger, some risk, better avoid. So it's also an indicator of likelihood of manipulation, but not as comprehensive as Beneish M-Score, a simple one. Being simple, its utility is less. But in the absence of score like Beneish M-Score, this definitely can be helpful. So, are day sales outstanding increasing? What do you mean by day sales outstanding? Credit period. If it's increasing, put 1. Not increasing, put 0. Day sales of inventory increasing, inventory period. Is increasing, put 1. Not increasing, put 0. Are other current assets increasing versus revenue? So take other current assets, percentage on revenue, last year, this year. Increasing, put 1. If not, 0. Is there a growing divergence between net income and operating cash flow? Net income is profit as per books. Operating cash flow, I told you the meaning. Is there a divergence? So the difference, last year, this year, the difference is bigger, then put 1, if not 0. Are there decline in depreciation related to gross value of property, depreciation rate? Is there a decline? Put 0. If not, decline, put 1. If not, put 0. Is the total asset growth high? Asset growth. So take again, last year assets, this year assets. Last year assets by this year assets. If it is greater than 1, it means there's a growth in assets, put 1, otherwise 0. Which, as you can see, are all the same factors covered under Beneish M-Score. But here, much simpler. So put the scores. The score is close to 0. So again, I'm taking you to Value Research Online. Close to 0 or 1 maximum, it's good. No possibility of no likelihood of manipulation. Anything above 2, be careful. Don't rely on these financial statements. So when it comes to selecting stocks, I already showed you F-score, above 7, good. Altman Z-score, above 2.99, good. Modified C-score, because Beneish M-Score is little comprehensive. So simple is to find modified C-score. Again, all these are calculated, but you can keep financial statements and all these you can instantly recognize, identify and put the number. Okay, let's take more time. So the filters what I showed earlier, one more filter is modified C-score, and by default it asks less than 1 or less than 2, means 0 or 1, it is acceptable. Okay, fine. If I can connect, I'll show. Right, now these are some of the models to read financial statements, to analyze financial statements. DuPont, to identify the problems within concern areas. Petrus F-score for selection of stocks. Z-score to identify is there a possibility of company going bankrupt in next 2 years. C-score and M-score, both when purpose is same. Is there a likelihood of manipulation? Beneish M-score is more comprehensive. A shorter version of that is modified C-score. But as I mentioned, no end for such models. So please think, what are we teaching in classroom? Okay, UG we may not have much of a choice. Whatever is covered itself is huge. But even at PG level, when we restrict to same, where is the validation? And if these can be captured, these can be covered, and if you can make students work on this, please imagine the practical exposure they have and their readiness for whatever the challenges. And for us also, it's a great learning. And those of us who want to get into research, these are beyond so many models where there's huge scope for research. And those who want to get into consulting, take my word, few of these models are good enough. Consultants, all that they do is identify the problem. Friends, a person inside the company can have better solution than an outsider. But what they don't know most of the time is the problems. And we don't need to be expert. These models are good enough. And if you can make templates, the figures 1 or 2 if you can highlight, that's good enough. And of course, with your knowledge and expertise, you can give solutions, you can create setup for the company, all that can happen. But those who want to go into consulting, all these models are of great help, because at least we're close to company, we know how to identify problem, what's the problem, we can say, and solutions if we can provide what more. So these are some of the models which we have wanted. Now, and if I make a statement, Indians are intelligent. How many of us accept? Indians are intelligent. Okay. Few hands going up, few hands is doubtful whether should I raise it or not. Few very happy, maybe they didn't hear the question. No, if you don't accept, if you not raise the hand, it means either you are not Indians or you are not intelligent. Friends, Time magazine, all of us know, conducted a survey quite many years back about IQ level of various nationalities. Different country people was IQ level based on various tests, whatever. And this was the result. Average IQ of an American was 1, and that was the lowest. And don't be surprised, because there it's always extremes. Either they're super intellectuals or super dead, super dull. Just to share one of my experience, Harvard, one of my paper was selected, I presented, and I'd been there, morning, breakfast, we don't have darshanis and all there, all that was McDonald's. I go and stand in the queue. Before my customer is standing, he was placing an order. When he wanted to make the payment, the girl in the counter said, "Sir, I have only $5 note and $10 note, I don't have change." So he managed to pay something, and this was the time when we didn't have Paytm, etc. Friends, nothing. It's either cash or card. My turn came, I placed the order. Bill was $6. I know she didn't have change. So I searched. I gave a $10. I didn't have $6 exactly, but I gave a $10 and $1, $11 I gave. What she should have done? She got offended. You should give me $6, why you give me $11? I told her, you don't have change. I given you 11. You should give me back. On fingers, I showed the calculation. And then she got convinced. Here, if you go to a small stores, a chota bacha will be able to make that calculation, correct? That's the IQ there. And don't be surprised, because there's a kind of environment, there's so much used to easy life, they don't think. And the same is happening with our youngsters also. Classroom, try 10 into 3, they'll take calculators, correct? I think many of us also do that. Next to them were Japanese. The average IQ was just 1.5. Japanese, we know them to be very intelligent, right? But unfortunately not so. For simple reason, whom do Japanese compete with? Americans. After Hiroshima, Nagasaki, etc. Their only lifetime goal is to defeat Americans. They compete with them. When my competitor is dulled, what will happen to me? I think on the same lines. The list went on. The average intelligence of an average Indian was 3, and that was the highest. Awesome. So great. Well, it's great that Indians are more intelligent. It's also true, no other country has seen as many scams and scandals as India has seen. That shows in what direction we're putting our knowledge into use. To give one interesting fact, I told you 2 of my students were selected for a company in Bhadravati, Mysore paper mills. So as a part of the project, faculty, we accompanied them. We went there, and there, one of the old employees was narrating one incident for us. Very interesting incident. When this Mysore paper mills in Bhadravati was started in 1960s, and the foundation stone was laid by none other than the greatest engineer world has ever seen, Sir M. Visvesvaraya. The company was built, employees were recruited, work started. But this company did something very unique at that time, which no other company did. What they did, they purchased punching clocks from a Japanese company, installed it at the factory gate. What is this punching clock? When a worker comes to factory, he inserts his card, it will punch time in. While going out, it will punch time out. Today we are biometric, nothing new. But at that time, it was a very new technology. So come insert a card, time in. While going out, insert, time, punch out. Time is recorded. Now, these workers at Bhadravati were known for 2 things. 1, intelligence, Indians. 2, lethargy, laziness, call whatsoever. Friends, where they were supposed to report at 9 o'clock, just to come by 12 o'clock. Just to wake up by 9 o'clock, I believe. So come at whatever time they want. But none of them wanted to lose the pay. So what they used to do, they used to stop the punching clock. Come at any time, insert the card. It is to punch between 9 and 9:10, the grace period. During lunchtime, they used to set it right. While going, very punctual, 4 o'clock, come near the gate, insert the card. It is to punch between 4 and 4:10. According to records, all workers in the factory, all the day, regular, punctual, whatnot. Management was super thrilled, very happy. It went on telling the entire world, see what kind of workers we have, so regular, so punctual, etc. But after some time, they started getting a doubt because day by day, the production was reducing. Certain days, no production at all. Workers are in the factory. They kept a watch and found out what's happening. They found the workers are stopping the clock. Now, these clocks were purchased from a company in Japan, it seems. So they wrote a letter to that company, where so-and-so company were purchased 2 punching clocks from you on so-and-so date. They gave all the details and said, our workers are stopping the clock. Please give us a suggestion so that they can't stop it. Japan company wrote back. Accept where the manufacturer of this punching clock, but are very surprised to know your workers are ourselves are not able to do. Please send the workers to our factory. This just how true it is, I don't know, but it's for sure most of our knowledge is used in the wrong direction. And whatever reforms, whatever regulations, whatever enforcement happens, this is a reality. Today, chartered accountants were supposed to authenticate are into frauds. Recently also, if you see, 4 of them, membership was withdrawn, cancelled, they were arrested because they were supporting something. No, I mean all that. No. In these times, well, knowledge is important. It's also important to see that it is put in the right direction. So today morning, Dean Academics was saying, Director Academics, it's not sufficient if you just give knowledge, but ethical practices. And I think that's more important. Knowledge is nobody's property. Today I know something. Definitely there's something you know better. Each of us can share, but how to put it into right use is what matters. Same thing, if I go reverse, this tells me, is there manipulation or not? Friends, if we can apply our mind, we can cheat even these systems also, correct? So to see that it shows no manipulation, what should I do? Not a big difficulty, but is that the purpose? No. So let's take all these models, put it in the right direction, enrich knowledge of our students, and I'm sure I always keep saying, here there is one resource person, but there is bundle of resource persons here. Just that now I have an opportunity, but definitely no doubt for you. So please put that all that knowledge to please research. Accounting is one area. Scope of research is limited. But your own domain, if you don't create knowledge, I don't think we as teachers can really establish ourselves. So it's not dissemination, assimilation knowledge alone, creation of knowledge matters. Let us make that happen. Friends, I'm sharing my contact details. So please feel free to mail me at this ID. student@drvrk.in or fdp@drvrk.in. This is my mobile number. Please feel free. Any area, particularly accounting, finance, taxation, those are my areas of interest. I think which you feel I can be of any assistance, please send a mail. Whatever I can, whatever I have, I'll definitely reach out to you at the earliest possible. You can call me, but I would always suggest send a message, because when you call, if I'm not in a position to take the call, it may not be good. Please message me. Whenever I'm free, I'll indicate the time you can get in touch with me. But I'll definitely work with each of you in our areas of interest, collaborate, and take us further. I would love to learn from each one of you. So thanks to Dr. Usha for this opportunity. And you have been one of the best audiences I've ever had. So participative. At least if didn't participate, at least you didn't sleep. That itself was a big award for me, actually. Thank you so much. For me, it was a great learning experience as well. Hope it has been useful to you. Thank you so much. Thank you. One. Just close this. Just close my saku. This.
Very good evening, everyone. Now we have come to the concluding part of the program, but there is no end for learning and knowledge gaining. I'm glad to be standing here to express my special thanks to the professor, Dr. Rajesh Kumar sir. Sir has covered all the aspects of various financial models, that how to analyze the financial statements using various case analysis as well. His ideas and elegance of explanations of everything, I need to mention my deepest sense of appreciation. Sir will always teach continuously for whole day without any tiredness, even without boring to anyone. You have all experienced the way how sir will take the session for whole day. It is my gratitude that sir has accepted our invitation even in his busy schedule to spend and share his valuable knowledge to all of us. Time to time, he was actually, when we contacted sir, that we are organizing, we have a plan of organizing faculty development program. He has suggested as a good topic relating to the faculty development program of commerce, especially for the commerce and management faculties and research scholars. Time to time, he was giving us all kind of suggestions and guidance for organizing this program. Sir is the main highlight of this program. I wholeheartedly thank you, sir, for sparing your valuable time with us, for enhancing our knowledge. Thank you very much on behalf of our Karnataka State Open University and the Department of Commerce. I thank our finance officer who was here with us for whole day, even in his busy schedule, to learn about financial statement analysis. But due to emergency, due to emergency Due to emergency, he went. In his absence, I thank our finance officer as well. I can understand you are hurried to move to your native places, but it is my responsibility to thank all of you for actively participated in the faculty development program for whole day. I hope you have enjoyed learning each and every session, and whatever you learned today, you will put it in practice and for your research work as well as for the academic work. I thank each and everyone for this program. We hope you all will provide the same kind of support even in future also. I thank each and everyone for this program. I also thank our teaching and non-teaching staffs for their support for the success of this program. I should not forget to thank our Professor Dr. Anand Gowda sir, Chairperson of Political Science Department, Dr. Chinnaya sir, Assistant Professor of Management Department, Dr. Shashikumar sir, Assistant Professor of Economics Department, Dr. Virendra sir, Assistant Professor of Economics Department. Like multidisciplinary cooperation we have got from various departments. They have given their untiming support and effort for successful organizing and the completion of this program. I thank them in their absence here. They are actually working hard in the backstage. I thank everyone who have supported directly and indirectly for this program, for the completion of this program. And even from the morning, our technical staffs who are working here from the morning even till now. So I thank them as well as for this program. Now, the certificate, as you are eagerly waiting for the certificate, it will be distributed in the counter. We have made 5 counters based on the alphabetical order. So let us get a kind of support from your side to collect the certificate. There are 5 counters based on the alphabetical order is arranged. Kindly collect attendance certificate, OOD, as well as the certificate from the counters. Thank you, everyone. Thank you, on and all.
Ravi, sir.
Sir, laptop, sir.
ತಗೊಳ್ತೀನಿ ಸರ್, ಇಲ್ಲೇ ವೇಸ್ಟ್ ಆಗಿದ್ಕೊಂಡು ಪೆನ್ ಇಟ್ಕೊಂಡು